So in this video, let us discuss Dixon. I have taken entry into this stock on 28th of November and I am recording this video today, which is 9th of December. So I took like 2 weeks back, I bought this stock and I want to explain to you this entry. Okay. I have some notes here. I will use these notes so that we don't have to switch back and forth between MarketSmith and TradingView. All of this data I have extracted from MarketSmith. And if you are a beginner to this channel, I will explain to you where this data comes from. Okay. But first, let us look at this data and let's try to understand how I executed the trade. You see, there are a lot of lines here. Okay. Different colors. You might find this very overwhelming, but I will explain to you each of these lines and what it means. Okay. Why are these lines important for me to manage this particular trade? So first come first. So since I bought the stock here, let me hide this. So this is what I saw. This is what I saw, a very short tight base before I bought the stock. So at the time when it broke out, these were the numbers. So these are not the current numbers. These were the numbers at the time the stock was breaking out. Okay. So look at this. Normally we do three kinds of analysis: comparative analysis, technical analysis, and fundamental analysis, which is exactly what I'm going to talk about here. So price strength, buyer rating, industry rank, and industry strength. This is comparative analysis. So you see price strength is 92, which is the relative strength, which is fantastic. I mean, beyond fantastic. Anything in the 90s is great. I want that number to be more than 80. Okay. If it is more than 70, it is still fine, but there should be other factors that should be very strong for me to buy the stock. Preferably, this number should be more than 80. If it is above 90, it is even more better. Buyer rating is institutional demand. I want this rating to be A or B. In this case, it is A. Industry rank, I want this industry group rank to be less than 40. I want the company to be in the top 40 industry groups. As you can see here, this is 70, so not ideal. Okay, it is not in the top 40 industry groups. So there is some weakness. Moreover, the strength is declining. So this group rank, okay, it was better 6 months ago. So maybe 6 months ago it was 35. Now it has become 70. Okay, I don't know the exact number, but I can tell you that the industry strength has declined because the rank has increased. Rank increasing means industry strength is declining. Okay. So when I do comparative analysis, I see two weaknesses. Well, that does not mean I reject the stock. Okay. I look at some other factors. Now I look at technicals. Technicals, base stage and blue dot. I will come to base stage and blue dot. Before that, I need to discuss the chart itself. So if you look at the chart, see, this is what I saw before I bought the stock. Okay. And these are numbers before I bought the stock. So if you see, the closing price is above this blue line, which is the 50-day simple moving average. The blue line is above the green line, which is the 150-day simple moving average. And the green is above this red line, which is the 200-day simple moving average. So it is a strong stage 2 uptrending stock. Moreover, all the three moving averages are sloping up. Okay. So that's the three lines. These are the moving averages. Okay. Next, there are minimum 10 candles in the base. So this candle completes 0.1. So you start counting from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 candles in the base. So I want minimum 10 candles because I'm looking for minimum 2 weeks of consolidation. Then you draw the contraction in the base. You see this is 0.1, then 0.2, then 0.3, and then 0.4. Okay. So 4 points in the base, correct? Minimum 10 candles in the base, correct? And blue, green, red, the moving averages. These are the three non-negotiable technical criteria that we look for. Okay. So in this case, it is satisfied. So point number 3, becomes my buy point. So that's the first yellow line. If I expand this, you see that the high of this candle, which is point number 3, that's the first yellow line, 15790. That's my buy point. Okay. The second yellow line is nothing but 1% above the first yellow line. So it is 15947.90, which is 1% above the first yellow line. So this is the buying range. Between the two yellow lines, I plan to buy the stock. You see this green line inside the two yellow lines? What is that green line? 15817.75. Well, if I go one day ahead, see, in this is a squat candle, so price goes up and then comes down. So on this day, when the price started crossing that yellow band, I ended up buying the stock. Okay, so I bought the stock at that green line. So my average execution price, which my broker gives me, okay, I start buying the stock when the price enters that yellow band. And the average execution price that I got for all the shares I bought is this price. So the green line should always be inside the two yellow lines. Okay. So which means I'm not buying the stock prematurely. I'm also not buying the stock extended. I am exactly buying in that buying range. So timing is very crucial here. Okay. That's the green line. Okay. What is this red line, this horizontal red line? Well, once I draw the green line, I have a basic non-negotiable rule. Once I get my average execution price from my broker, the first thing I will do is I will put a 8% stop loss. Okay, 8%. So this number, the red line, is nothing but 92% of the green line. Okay, so basically from green line, if you go down 8%, that's where you get the red line. And this is my hard stop loss. Hard stop loss means the stop loss that I keep with my broker. If the price completely reverses and hits that red line, I will be automatically out of the stock. So that is my hard stop loss. Now, as you can see, on this day, I ended up buying the stock. But if you see, on this day, I did not get price confirmation. So price did not close above the first yellow line or above the yellow band. Also, I did not get volume confirmation. Okay, volume did not close above this blue line. So less than average volume and price confirmation is not there. So price confirmation, volume confirmation, I don't get any of them. So in such cases, I'm likely to sell 50% to 75% of all the shares I have just to control my risk. Now, there are two ways to manage or control risk. One is you reduce position size. Second is you cut down, second is you move your stop loss. So one is you reduce your position size. Second is you move your stop loss. So in this case, I selected the second method of moving the stop loss rather than selling my shares. Okay. So in this case, rather than reducing my position size on this candle, I decided to move my stop loss from here to here. Okay. That is what I did on this day. Okay. Later I moved it back here, that I will explain later. But on this day, I moved my stop loss from here to here because I did not want to give up on my shares. And why did I not want to give up on my shares? Is because of the fundamentals. Now let's come back to the numbers. Where are the numbers? Yes. So we looked at comparatives. There are two weaknesses. Technically, it looks strong. The base stage is middle. So in a stage 2 uptrend, you have early stage, middle stage, late stage. So if I go to Market Smith, and I have to go to the Market Smith now to explain to you what I mean by middle stage. So let's go to Dixon. By the way, I am still in the trade. I have not sold the stock. And I also don't recommend that you buy the stock because it's already gone beyond the buy point. See, this is Dixon. This is the current price. I bought it somewhere here on this red candle. Now, if you see here, there is a green dotted line. If I click here, it says pattern consolidation stage 3. Actually, it is not stage 3, it is base number 3. So the stock has just crossed base number 3, which is middle stage. Base 1 and 2 is early stage. Base 3 is middle stage. Base 4 is late stage. So base 4 is not there currently. As per Market Smith, base 4 is not yet formed. Okay. That is why I consider base 3 as a valid base for this stock. That is why I say I am buying it in the middle stage somewhere. Not I am not buying it late. I am not buying it early. I am buying it in the middle stage somewhere in the journey of the stock. I can do base counting manually. I have made a video on this earlier, but since I already have Market Smith, I just click and see in general where I am buying the stock. Am I buying it early or am I buying it late? If it is neither early nor late, then I am in the middle. Okay. So that's why I have written here base stage is middle. Blue dot, yes. So what is blue dot? So if you see here the base, you see blue dots here in the base. Okay. Blue dot means 52-week high of the relative strength line. The relative strength line represents strength of Dixon stock relative to the Nifty. Okay, and when that line reaches 52-week high, that means the stock has never been this much strong before. Okay, that is what is represented by the blue dot. And when the blue dot comes in the base, it is considered to be an extremely powerful sign. So the stock is consolidating within a stage 2 uptrend. And the consolidation results in a blue dot means the where the stock is holding on to its strength even when the market is falling. Okay, that is what is meant by the blue dot. It shows the relative strength of the stock compared to the general market index, which in this case is Nifty. So the blue dot, yes, means very powerful indication that the breakout is likely. Look at the fundamentals. Latest 3 quarters EPS growth 20%, 107%, 261%. Accelerating EPS growth for the latest 3 quarters. Accelerating sales growth for the latest 3 quarters 52, 101, 133. ROE is more than 17%. Return on equity. Margin is flat. So there hasn't been any change in the margin. If you look at past 10 years, 5 years, 3 years, it remains flat between 2 to 3% somewhere. Okay. For this kind of electronic contract manufacturing business, I think it's a decent margin. Now, we have done three kinds of analysis: comparative, technical, fundamental. Fundamentally, it is very, very strong. Technically, it is very, very strong. Okay. So the weakness in comparatives is compensated by the strength in technicals and fundamentals. Let me repeat that statement so that it registers here inside your 2 years. Okay. The weakness in comparative analysis is compensated by the strength in technicals and fundamentals. That is the reason why I bought the stock. Okay. So I bought on this day. On this day, I should have reduced my position size to control my risk, but instead of reducing position size, I chose to move my stop loss. It's one and the same. Okay. The risk is one and the same if you choose to do either of the two. In this case, I chose movement of stop loss rather than reduction of position size to control my risk because the fundamentals are very strong. Even the technicals are very strong. Just because a stock squats like this, squat means stock goes up and comes down. This is a term used by Mark Minervini in his book, Trade Like a Stock Market Wizard. Okay. So the stock squats. Now on this day, if you see market condition is rally attempt. So market condition is something you can check here in this link. The market is trying to attempt a rally. It is not in a confirmed uptrend. That is not a good sign. Okay. Market is in a rally attempt. Still, I ended up buying the stock. I was okay to tolerate the risk. Look at annual EPS 32, 42, 62. This is in rupees, Indian currency. So, annual EPS, there is positive growth in the last 3 years in this company, in the EPS. Okay. Which is the characteristic of a leader. So, that makes it fundamentally a strong company. Industry leader. What is the position of the stock within its own industry group? Now, I look at market capitalization. This company has the highest market capitalization in its own industry group. Okay, so it's a market leader. All other stocks come below. It's rank one stock. So this stock is a leader. Except for that comparative analysis, everything about this stock is great and it is ideal. Now, if you read William O'Neill's book, a leading stock does not necessarily mean a stock with the highest market capitalization within the industry group. Okay, this is a simple uh, idea that I am using to keep my analysis simple. As per William O'Neill, a leading stock is a one which leads in terms of EPS growth, sales growth, return on equity, margin, technicals, things like that. So that's what he calls as a leading stock. But I like to keep my analysis simple. So I just focus on the market capitalization. Basically, my philosophy is if the stock is good, fundamentally, technically, and everything, then the stock should be showing the highest market capitalization within its industry group. That is my philosophy. So I look at the market cap, I look at the top three companies in the industry group, and Dixon is at right at the top. Okay, it is rank number one, not even two or three. It is rank number one. So this is the analysis that I have done on the stock before I bought the stock. Okay, not after I bought the stock. Look what happened. This was 28th of November. Then the stock showed some strength the next day. Then it shot up. Okay. Then I moved my stop loss from here to here. Once it shot up, I moved my stop loss from here to here because I wanted to give it more room. Now, what are these two blue lines? See, this blue line is my mental stop loss number one, which is point number four in the base before I bought the stock. So, if the price reverses and closes below this blue line, I will start cutting down my position size because I don't want to wait for the stock to come all the way from here and hit my stop loss. Okay. I don't want that to happen. So these are markers. These are indications. These are levels on the chart which I am watching. If the stock comes down, if it touches that level, I don't have a problem. But if it closes below that level, I have a problem. I might start reducing my position size. Moreover, on an intraday time frame, like a 15-minute time frame, if there is a close below this blue line on high volume, that's not a good sign. Okay, I might start reducing position intraday itself. I will not wait for the close of the day, because if I wait for the close of the day, probably the stock might hit my stop loss by the end of the day. I don't want that to happen. So that's my first blue line. That's a mental stop loss. Another blue line is here. You see, between these two candles, there is a rising window. Rising, there is a gap, there is an upside gap, which is very good. So a rising window becomes support. So the lower line of the rising window, which is the high of this candle, that becomes my second blue line, the high of this candle. So if the price touches this level, I don't have a problem. But if it closes below this level, I will start reducing position size. So let's say if you have 100 shares, it closes below this blue line, you might sell 20, 30 shares. Then it comes down, closes below this blue line, you might sell another 30, 40 shares. Okay. So by the time the stock comes and hits your 8% stop loss, you are not losing 8%. You are probably losing 3 to 5%. Okay. Overall, because as the stock is coming down to your stop loss, you are cutting down your position size. So your actual loss is not 8%. It is much less than 8%. Sometimes it could be 2 to 4%, not 3 to 5%. Okay. So on this day, you see my patience finally paid off in the stock. These two candles really tested my patience, but I hung in there because because of the leadership position. Sorry, yeah, I hung in there because of the leadership position in the stock. The stock is displaying and the strong fundamentals. Okay, so the stock shot up. Let me reduce this volume thing. Then next continues to go up more, and this is the current stage. Okay, so let me move this slightly down. I will save this. So that's the current state I am in. Okay, so if you see, I think it's already giving me a double digit return from this green line. to about here. Yeah, 10.52% within just 1 week. Okay. Good movement in the stock. The stock price action is basically confirming the strength that you see here. Okay. So that was a nice entry. I hung in there because the stock was showing strength. I could have reduced my position size on this day, but I did not do that. I chose the other route for managing risk. Well, if the stock was not fundamentally strong, well, then instead of moving the stop loss, I could have reduced my position size. Okay. So my behavior in terms of trade management depends on the character of the or the personality of the stock. If the character or the personality of the stock is strong, I will be very reluctant or hesitant to give up my shares. Okay. If the stock's personality or character is weak, so fundamentally it is not great. Okay. I will not give the stock much room or time to fluctuate. These are two different things. Okay. Giving room to a stock to fluctuate and giving time to a stock to fluctuate, these are two different things. Okay. Now that behavior depends on the character or the personality of the stock. Okay. So that's the entry which I wanted to discuss with you. I hope you understood what are these lines. The two yellow lines represent my buying range. The two blue lines represent my mental stop loss. The red line represents my hard stop loss. And the green line represents my average execution price. Okay. And within the base, if you notice, the volume was low. So the volume contraction, price contraction is there. If you read Mark Minervini's book, he talks about something called as volatility contraction pattern. All that characteristic you see in this stock. That is why I bought this stock. Okay. Now let's come to, for those beginners, if you don't know where to get this data. See, you go here, you click here, click on consolidated. See, this is where you get the comparative analysis data. Here on the chart, you will get the technical analysis, the blue dot and the early stage, late stage. Okay. To check the industry rank, see these three you will get here, these three. Then improvement in industry strength, that you will get here. You go to this link, take a screenshot, go to this link. Okay. You have industry groups here. So you see household appliances. So you scroll down, you go to household appliances. Yeah, here. See, 6 months ago it was 59 rank, now it is 75. So it is worsened. The industry strength has declined. The rank has increased. Okay. That's where you can check. So these four numbers, you know how to check. The base stage and blue dot, you can check it on the chart itself. Then what else? Fundamentals, everything is given here. So this is consolidated EPS growth, sales growth, return on equity is here. Margin you will find, this is ROE. Okay, margin you will find here. Scroll down. See after tax margin. See 1.34 to 2%. No improvement in margins. Okay, nothing. It just remains flat between 1 to 3%. Okay. Then what else? Market condition. Well, you see this link. Market condition history. See, this is rally attempt. It tells you what to do. If you click here, it will tell you what to do. Okay, you can read this. Then industry leader, how do you check that? You go to industry, you click here, click on stocks. See Dixon, highest market capitalization within the industry group. Okay, Dixon, Voltas, Crompton Greaves, the top three companies in that industry group as per market capitalization. Then what else? Annual EPS, it's here. You see annual EPS 27, 32, 42, 62. So last 3 years, positive annual EPS growth. The rate of growth is not important in annual. The rate of growth is important in quarterly, not in annual. Okay. We just need to see positive EPS growth. So that's my analysis on the stock. The stock is doing well. As you can see, it is beyond my execution price. So good double digit profit. I have not sold a single share of the stock because the stock is showing me strength. It is in the middle stage. By the time a stock goes from base 3 to base 4 or 5, It has already given a triple digit return. Okay. So I am expecting that to happen with this stock. So this is like a positional trade. As long as the stock remains above this blue line, which is the 50-day simple moving average, I would be less inclined to sell any shares of this stock. See, I have mentioned earlier that every trade is a story. So we will be tracking this story. I will be creating more videos on the same position that I have taken. If I sell partially, I will make a video. If I sell all my shares, I will make a video. If I'm holding on to the stock, so we will track this story. Okay, just like on news channels, they track a particular story. Every trade is a story. So we will track what will happens with this stock. So this will help you understand what characteristics to look for. Okay, this is what I'm looking for. Okay, and based on that I'm making my decisions. So my decisions are based on data. My decisions are not based on some business news or some opinion given by an analyst or somebody. I am taking my decisions based on data and price and volume. Okay, so that's my analysis on Dixon. Hope this helps. Thank you so much for your time. Have a fantastic day today. The market will open in some time. I'm recording this video at 8:32 a.m. It is 9th of December. Okay. So have a fantastic day today. Thank you so much for your support and time.